Credit loan sourcing for SMEs. If you think of any business, the first thing that comes into the mind is capital investment. Be it establishing small business or expanding the existing one, we all look for easy credit loans. Some even try to hit upon financial aid as a solution to overcome existing loans. It has been observed that there are different stages that define the credit requirement of any business. One must analyze the stage of their business. The main issue is the long and postponed payment cycle that results in an urgency to raise money from different sources for business survival. Credit sources for SMEs. There are private as well as government organizations that extend help to small and medium businesses. Their credit loan policies and terms state pre-specifies loan credit for a certain period of time. It is a big help for SMEs that struggle to meet their day-to-day expenses. Listed below are a few common sources that offer credit loans in no time with easy processes and minimal documentation. Angel investors. You can easily approach an angel investor who can finance your business in return of ownership equity or convertible debts. It is one of the most popular ways to raise money. These investors analyze the potential in your business and calculate the profit that it can fetch in the future. Next one is bank finances. Banks are the most famous source of credit loans for maximum businesses. They provide a certain amount for a defined period of time against the security of any asset such as land, house, or even jewelry these days. It is just that getting a loan easily is a little complicated for the SMEs that do not have a good financial loan history, self, friends, and family. What if your business is not doing well and thus loans are also not easily accessible? You will definitely turn to your own savings. In the worst case, you will have to ask help from family and friends. You can think of it as a credit loan with zero interest rate. Venture capitalists. If you want high risk but at the same time high return investment, go for it. It is basically a subsidiary companies that hold significant cash for investment purposes. To attract a venture capitalist to invest in your business, come up with a solid plan of action that promises high returns. In most cases, that is difficult, so the SMEs end up selling their businesses to venture capitalists rather than getting credit loans.